And I think part of Trump showing up there with all his cabinet and CEOs of the 25 largest companies, I think that was largely symbolic because the market, if all the CEOs that went with him, if you add up the market cap of their companies, it is bigger than all of the market cap of the entire Chinese stock market. So I think it was just a show. It was his way of saying, listen, we're still the United States. We still have power. We want to do a deal with you because he's very transactional, but we don't have to do it.
Joining me now, Mr. Milkshake himself, Brent Johnson. Brent, good to see you again. Okay, we've got renewed conflict in the Middle East as of today, and today is July 13th, so it's a Monday. We have the Trump administration saying, hey, you know what? We're going to reinstitute the blockade. There are oil prices that are jumping, a whole lot going on. So let me ask you, does the renewed conflict change your outlook for the dollar, your milkshake theory, or anything? Were you expecting that the conflict to resolve itself and then, we'll go back to normal? Or is the Iran conflict going to be like the biggest thing we're going to see this year?
No, so it's kind of playing out the way I expected. And, I did a couple different interviews right when it kicked off. And I did another one kind of right when the MOU was signed. And under both scenarios, I said people are jumping to a conclusion way too soon. When it was first kicked off, I think a lot of people said this will be the biggest policy mistake in U.S. history. And I said, well, it might be, but it's just way too early to say so. And then when the MOU was signed, they said, or many people said, well, see, the Iran won. And I said, well, maybe, but, this is not over yet, and I don't expect the MOU to last. And part of the reason is I just don't think that the United States is going to sit back as the global hegemon and let Iran run the Middle East. Now, I might be wrong on that. And if it turns out that that's the case, I'll admit that I was wrong. But I think people are putting what they want to see happen in front of what's actually happening. And this happens all the time. As you know, narratives take place of what's actually going on. And listen, I should say, this is not to say that things are going perfectly for the United States. This is not to say that this has been a fantastic plan that has been seamlessly, implemented. I think a lot of things went wrong. I think Iran had much more staying power than was initially expected. But I don't think that the United States was totally shocked by it. I don't think anybody thought it was going to be a 3-day operation. And I think this is part of a much bigger game that's at play. And I think finally that despite all this, and we've talked about this several times, just despite all the problems that the United States has, the United States just has so many cards they can play. And I think that's kind of what we're seeing here now. Again, they're starting to play these cards. And, I just think the game's far from over. And I think people are too quick to dismiss the power that the United States has despite all the problems that it has.
Let me ask you this, Brent. I look at it this way. You're a perfect guy to ask this about. I think there was 3 goals the U.S. had going into this. One, you just said it, was regime change, or what the Israelis said, regime collapse. Maybe they were, maybe that wasn't necessarily an expectation. Maybe that was more of a hope. And that one certainly has not played out. I mean, they went right to the decapitation strike right away, and you thought, okay, here comes maybe some uprising or whatnot. So I think that was number one. That one didn't work. Regime collapse didn't work. The second one, of course, is the nuclear program, which that one's still up in the air. We don't really know how that's gonna play out. But it looks like so far the Iran nuclear program is literally dead and buried at this point. And the third thing is, which I think is the major sticking point right now, is who comes out of this controlling the Strait of Hormuz. And I think this is one of the things that the UAE and some of the other Gulf states are backing the United States and saying, look, Iran cannot come out of this with any kind of control over the Strait of Hormuz. And I think that's the sticking point. So what do you those are the 3 objectives that I see. And I think that's why it's such a difficult thing.
No, I think that's absolutely right. And the other thing that I would say is I think you have to think of this on a distribution curve, right? And on the far right is that it's a 2-day operation. It goes perfectly. And now the United States is in control of
that was the
right?
0.0000.
But it's such a small, it's a possibility, but it's not a probability, right?
Yeah.
And then on the far left, you have nuclear annihilation of the whole world, right? And that's a pretty small possibility too, but it's a possibility.
It's pretty wide disparity.
Yeah, but here's the point that I've tried to make is I think everything to the right of the left tail, I think the U.S. can live with that. And what I mean by that is it doesn't mean that it will be good for the United States, but it may be better for the United States than everybody else. In other words, if a big disaster happens and the strait is closed forever and there's all this disruption, I think the U.S. is better positioned to deal with that disruption than Europe is, than Africa is, than much of Southeast Asia is, and probably even better than China is. Now, Russia is kind of the wild card. But Russia's having its own problems too. They've got gas lines a mile long. People are, are not happy with the way that is going. So every country has problems right now. Now, does the United States have problems? The United States has problems in spades, but they have an incredible amount of resources that they can draw on as well. And so I think while the US kind of went in thinking that perhaps they could get lucky and get something to the right of the distribution curve, but if they couldn't get that and it went to the left, as long as it didn't go to the far left, they were okay with that because chaos kind of keeps them in control, relative control of the overall game. And the other thing that I want to talk to you about, so this is pretty good timing actually, is a lot of people said that Iran was going to, that they're so aligned with China and Russia, but China and Russia didn't really come to their aid during this crisis, right? And then the second thing is when the MOU is signed, the US said, we are going to let you sell oil for dollars. And that was one of the things that Iran wanted. The reason Iran wanted it was because they'd been selling most of their oil to China at like a 30% discount, right? And so if they could sell it for dollars, now they've brought Iran back into the dollar system as opposed to selling it for yuan. And Iran would like that because now they can sell it for a higher price than they otherwise could. But it didn't really take place because once the oil got out there in the ships, nobody was actually buying it other than China. China was still kind of the main buyer. So I guess the point I was making was that if they could somehow strike a deal with Iran, that's the best case scenario, right? If they can get the nuclear dust, if they can get rid of the regime, and if they can bring them back into the global fold, that's the best case scenario. Now, obviously that didn't happen, right? But even though it didn't happen, Iran is not in a great situation right now. Even if you grant that they won the battle, it cost them 300 or 400 billion in infrastructure damage to do it, right? And so even if the United States were to write this $300 billion check that everybody thought the US was just going to hand them, which was never going to happen, but even if that, it would just get them back to even, and it would take them a dozen years to get there, right? So I think Iran has played their hand fairly well, but I think they've overplayed their hand, to be honest. And I think in the fullness of time, I think them weaponizing the strait will actually be seen as a policy error on their part, not on the part of the United States.
Yeah, you take the long-term view, and it may turn out to be one of the biggest backfires of all time. Not the least of which is starting with the Middle East itself. I mean, the UAE is making a big deal about developing its facilities so that you'll never have to use the Strait of Hormuz again, which is a very realistic possibility. Now, even no matter what happens with the conflict today, the rest of the Middle East can say, you know what, we learned our lesson. We're never going to depend. Maybe that's the answer to the control of Hormuz, is that Hormuz no longer becomes a bottleneck and it no longer becomes a major issue, which would be huge. But I would say this too, whatever you view the U.S. versus Iran, we were told from the very beginning, don't you dare attack Iran because the Middle East will burn. The U.S. went in there in the first couple of days of the conflict and killed the Ayatollah. They killed the Ayatollah and crickets. So not only did China and Russia not come to Iran's aid, none of the rest of the Muslim world did either. So there's a lot here at play too. And I think, again, the Trump administration, Trump is a deal maker. So like you said, the carrot was always, we're going to let you rejoin the global community, maybe a little bit at a time, maybe in stages, but you're going to be able to sell your oil in dollars. You're going to rejoin everybody. I mean, it was going to work. That was the upside. The positive thing is, give up their nuclear program, maybe give up the Strait of Hormuz, whatever the case, whatever the sticking point is. But at the end of the day, there is a positive future here for you. And unfortunately, I think goal number one would have been the key to it all. We don't know who's in charge. I mean, the other things, we don't even know who's negotiating in Iran. I mean, it does seem like there's a couple of different factions here. The hardliners are still shooting missiles. Trump is negotiating with people who keep saying we have a deal, and then they can't back the deal up. So there's a lot of fog of war stuff.
That's a good point. And the thing that has allowed Iran to withstand the attacks, if that's the way you want to say it, is also the thing that is keeping them from getting to an agreement, because it was so decentralized that you're talking to one group, you're not necessarily talking to the other group, and the one group may agree to it, and the other faction doesn't agree to it, right? And so I think that's part of the ongoing struggle with coming to an understanding as well. But at the end of the day, I just don't think, and I'm going to say this too, I should have said that, like, I would not have advised this course of action. I don't think it was necessary at the time. I understand the arguments for why they thought it was necessary at the time. I don't think it was necessary at the time, but I understand why they did it. And, I just think that the US has the ability to not go in on a full scale invasion, but kind of control the overall situation from afar, if that's the right way to say it. Now, this is not to say the U.S. has full control. This is not to say that things haven't gone wrong. This is not to say that this is perfect. I'm just saying if the U.S. were to, they put the blockade back in, right? And so now Iranian oil cannot come in or out. Now, perhaps apparently some ships are coming in and out along the Omani coast. Whether that's actually happening now, I'm not there to actually see that. But it goes back to my point earlier. If oil no longer flows through that corridor, that hurts everybody, but it hurts Iran more than it hurts anybody else. It hurts China more than it hurts anybody else. It hurts Southeast Asia more than it hurts anybody else. And one of the few places that is relatively chaos-free at the moment that the rest of the world can go get energy is the United States, right? And so I think one of the problems that many people have when analyzing this issue is the bad things that can come out of it and the fact that they're not psychopaths. Like, it's hard to understand that the psychopaths that are running things would actually do this. But that's not the way, the people in power don't think the same way necessarily that I do, that you do, that the average person on the streets think. They think differently. And I think this is part of a bigger picture, a struggle between a power competition between the United States and China, right? I think that is ultimately what it's about. And I just think that I just think people are just jumping to the conclusions way too soon. There's still a lot of game left to be played, I guess is the right way to say it.
I mean, people being people and making up their minds from the very first moment that something happens.
Yeah. No, that's my point. And listen, I'm open to this could obviously end disastrously. I am not saying that's not possible. I'm just saying we're not there yet, and I think people have jumped to conclusions.
Well, let's talk about some of the look. I think we both agree. Certainly, this is a very complicated situation. Therefore, the likelihood of reaching a favorable resolution relatively soon was never really good to begin with. With both sides' complicated goals, it was going to be very difficult, if not impossible, for them to say in just even 4 months' time, okay, we got what we wanted, you got what you wanted, there's a pathway forward here. I think that was for the public. The Trump administration was always 2 weeks from a ceasefire was going to be signed, and then 2 weeks later was another 2 weeks, and then 2 weeks later was another 2 weeks. And the Iranians were like, hey, 2 weeks, the U.S. is going to be burning. All their ships are going to be sunk and all that kind of stuff. So that's not going to happen. But let's think about this. Okay, macroeconomic context. For me, it was very striking signal from the oil market itself. Start with the oil market itself, where you got contango at the front end of the WTI futures curve and Brent futures curve and some of the other Middle Eastern curves too. When was that? A week ago from today. So last Monday, the Friday before. So just before the July 4th holiday, you had the market saying, there's a lot of uncertainty in the geopolitics part of it, but the curve was basically flat all the way across. Yeah. Which to me raised the question of whether or not there's going to be demand destruction already filtering into the market. Thank you. Now, of course, that's not the case today. Oil prices are up, pretty sharply. In fact, they continue to rise. And was looking for the spreads before we started here. So the curve has steepened out a little bit more on the supply side. But the idea of demand destruction has already seen, in my opinion, my reading of the oil market has already filtered its way back. It's filtered its way into the conversation.
Yeah, I think what's likely to happen, and again, I always say likely because I don't know for sure, but my guess is that we will get an inflationary impulse latter half of this year, early next year. But just because of energy prices, and because I think it's possible that we have higher food prices later this year as a result of some of the chemicals and the fertilizers and the different, inputs that go into the agricultural planting season that's now passed. But I think that higher energy prices and higher food prices, even if we get a resolution to this, Iran situation in the next couple of months, could show up later this year. And then that can cause demand destruction 9 months from now, a year from now, 18 months from now. And so when people say, this is definitely going to be inflationary, I'm like, well, I think we can have an inflationary impulse. But you got to remember, if an inflationary impulse becomes too quick and comes too sudden and comes too severe, it leads to massive deflation. And there's no better example than COVID, right? You had basically all the shipping lines shut down and the world stopped moving. And so you had a supply chain disruption. Prices went through the roof and markets, or, the input costs went through the roof. But then because you couldn't get them, But then you also had demand destruction because the world wasn't doing anything, right? And so, yeah, you had inflation, but it ultimately, goes back to some deflationary pressures as well. And I think that's what we're set up for again.
Yeah. So in that situation where you've got a lot of these factors that are, still lurking under the surface, let's talk about the dollar here. What does the dollar do in this type of situation? Because for the last couple of months, the dollar has defied, I think, a lot of people's expectations. Maybe they set them aside because of the unique circumstances and the extraordinary circumstances of the Iran conflict. But before we got to March, everybody, and I mean everybody, said devaluation, trade, debasement. Now all of a sudden it's like, okay, what's we're not getting the devaluation or debasement. Is this a temporary reprieve and that somehow, flight to safety, saving the dollar? Or are we seeing something more structural emerge, or the Iran conflict forcing something more structural back to the surface?
I think there's two things here. This topic that you just brought up is really foundational to all of my work. And it's the reason I've pounded the table as hard as I have on
right,
the
you don't have any table left to pound. There's a fist-sized hole there where you've been pounding it so much it just goes right through.
Fair enough. But and the point is this: is if you go back to 8 years ago when I first started talking about that, I said, listen, U.S. equities are going to go higher, gold's going to go higher, bond price, interest rates will probably go higher. But the dollar's going to go higher as well, just because all of the other currencies, are even worse than the dollar. But the point is that fiat currency does lose value over time. That it's designed to lose value. If the governments of the world didn't want a currency that lost value, they would have stuck with gold. They don't want a currency that does. Fiat helps them, right? And so the debasement trade is real. If you look over 3, 5, 10, 15, 20, 30, you're going to see debasement of the currency. But the point that I've tried to make is that it is going to be punctuated by terrifying drawdowns along the way. And the reason these terrifying drawdowns along the way come along is because the dollar gets stronger versus foreign currencies. When the dollar gets stronger versus foreign currencies, then you get a credit contraction that can eventually, if not stopped quick enough, can become a liquidity issue, right? You don't just get a credit contraction. You get a credit collapse and you get a lack of liquidity. And then this basically a margin call on the dollar, right? And we've seen that several times over the last 5 or 6 years where, you have this period where everything's running up and then whoosh, you get a 20 or 30% drawdown in asset prices. And then it goes up again and boom. And I think what we saw earlier this year is a good example of why that can happen. As you pointed out, all of last year, especially the end of last year, first part of this year, with after what silver did last year and gold did last year, people were saying the debasement, all you have to do is buy hard assets and sit back and, this is easy street because Trump wants the lower dollar. All of that stuff can be true, but just because that's what they want doesn't mean they're going to get it in a nice, smooth, easy fashion. And so I think what's happening right now is we're seeing a tug of war between what the market is demanding right now today and perhaps what Trump wants 6 months from now, a year from now, 2 years from now. Because I do think that ultimately they do want a weaker dollar. I don't think they want a weak dollar, but perhaps they want it weaker. Maybe they'd like the DXY to be in the mid 90s or low 90s or even high 80s. But when you get a supply crunch and you have to pay up to get something, you need dollars to get that. So when oil's trading at 120 and when copper's trading at 6.5 and when natural gas is in Europe is up 20 or 30% and when food prices start to rise, those trade in dollars. And so now the countries that don't have dollars need more dollars just to buy the necessities, right? And that is why, you saw earlier this year, despite the debasement trade, despite oil or silver and gold having such great layers last year, as soon as we got into some kind of an uncertain time and a potential liquidity squeeze, and higher energy prices that trade in dollars, what happened? The countries that needed to buy that stuff had to sell their treasury bonds or had to sell their stocks or had to sell their gold and their silver in order to get dollars to go buy those commodities. And I think that's the perfect example that even though the system may change someday, to operate on the global stage today, you still need dollars. And that is a long way from no longer being the case. Now, will it change someday? It probably will change someday, but it hasn't changed yet. And there's a number of structural factors that make it more likely than not that it will stay that way for quite a while.
Yeah, so that's it raises a couple of big questions here. I mean, let's talk about precious metals for a second here, because that was, everybody heard the same thing. Gold prices are screaming higher. That must mean the dollar has to go lower, because as we know, the only reason that gold would be higher is because the dollar is going to zero. That certainly wasn't the case, but that was the narrative, and it seemed like it was plausible for a time, which why it captured so much attention. And I think why it got so ingrained into mainstream psychology was because look at gold. Gold is telling you the dollar's going to zero, so here it is and here it comes. That not being the case, why did gold go up and why isn't gold going up? I mean, look, you can make a clear correlation with the Iran conflict because gold was going up. Yeah, it's high. It hit its ultimate high in early January, so it's coming off the high to begin with. But you look at the chart, February 27th, the war starts and gold kind of goes down there. So
yeah, I charted it out. It literally from the day the war started until the MOU was signed, gold went down 24%.
Yeah. So the question is, what was gold actually telling us? If not the dollar going to zero, which, well, let's dispense with all, it was never what it wasn't a debasement trade. So what was gold actually telling us last year?
So here's my take on it. I think part of it is the debasement trade. They, over time, countries know that, or institutions, buyers, market participants know that dollar loses value over time. So you want to diversify out of fiat and get into something else. They already own equities. They already own treasury bonds. Gold is kind of a neutral asset that the whole world has a history of wanting. And so that becomes a reserve asset because it's time tested, right? And you can move it in huge quantities very quickly. For all the reasons that people buy gold, I think that's why gold did well last year. Now, I think what happened this year, I should also say, I think it's a result of, the way the United States is dealing with the rest of the world now is no longer by this rules-based order that is for the greater good. It is now an America first, very transactional, one-on-one way of dealing with the rest of the world. And we're no longer negotiating multilateral treaties for the good of everyone. We are, implementing one-way treaties for the good of the United States. That's a much different way than dealing with the rest of the world. And after the United States froze the Russian reserves, I think, institutions and central banks around the world are looking and saying, hey, we should probably have something other than just treasury bonds, right? Not only because they lose value over time, but, or the dollar loses value over time, but also just for diversification. So I think there was some of that. And so, you've seen those charts as I have, that gold is now a bigger percent of reserves than US treasuries. What is never explained on those is it's largely due to price and not number of units held. It's not, it's not that the tons haven't gone up and it's not that the number of bonds held hasn't fallen, but the chart inverted basically because of treasury prices falling 20 or 30% and gold rising 100%, right? So that's a big reason those charts look like that. But I think this year, what has happened to gold and silver, I think is a perfect reflection of it becoming a reserve asset. And what I mean by that is, what is the point of buying reserves in the first place? It's the same reason you have a piggy bank. That's essentially what it is. Foreign exchange reserves for countries is like an individual having a piggy bank. And when it starts to run, when that rainy day shows up and it starts to rain, sometimes you have to go into your piggy bank, right? And so earlier this year, when the Iran conflict breaks off and, liquidity gets tight, you have to go and you have to tap your reserves. Well, if you let's just keep it simple. Let's say you've got two different types of reserves. One of them is down 20% from where you bought it. It's treasury bonds. And the other one is up 50, 60, 70% from where you bought it, which is gold. Now you have to tap one of them in order to get dollars, because you still need dollars to operate on the global stage. So what do you sell? Well, you probably sit there and you think, well, bonds are probably undervalued a little bit and gold's probably overvalued a little bit. So I'm going to sell the one that's gone up a lot and I'm going to wait for the treasury bonds to either come back or mature rather than selling them at a loss. If I hold them to maturity, I'm going to get 20 cents more on the dollar than I get now, or whatever. I'm exaggerating, but you sell it early, you have to take the early withdrawal penalty as a result of interest rates. But gold is up, so you sell the gold. And so I think you saw Turkey sell gold, you saw Russia sell gold, you saw the Gulf states who were most impacted sell gold. And it happened right when the war. I don't think the fact that it started falling the day after the war kicked off and it bottomed the day the MOU is. I don't think that's a coincidence, right? And so and so this is what if for the people who are big gold advocates, which listen, I am. I think everybody should own gold. I think over time it's going to end up going a lot higher. But if you are going to advocate for gold being a reserve asset, reserves get used when they're needed. And that means they get sold, right? Gold doesn't help you if you're not willing to sell it. I think gold did exactly what it was supposed to do. They bought it because they knew they might need it in some kind of a crisis or in some kind of a liquidity event. The liquidity event showed up, and so they sold the gold, which is exactly why they bought it in the first place.
It wasn't always a reaction either, right, Brent? I mean, if you're one of these Middle Eastern states and you probably catch wind that the U.S. is moving assets toward Iran, you start proactively selling your gold today. So, I mean,
yeah,
there's a good likelihood that the selling that happened in February, long before we got to the actual conflict, was some of these states saying, you know what, I might want to raise my liquid dollar balances. I'm going to get, as you said, you know, I've got gold sitting there. It's doing its job perfectly. It's been going up in value. I can get a good price for it. So I'm going to sell some preemptively and prudently to raise my liquid dollar balances. And I think that we saw a lot of that happen, right, as you said, right on through to the MOU under being signed.
Well, and I think, there's probably some people out there saying, well, why would they sell the gold? The bonds are just going to continue to lose value. Well, maybe they will, maybe they won't. But there's other factors here too, right? Like if the Gulf states start fire selling treasuries, that's not going to make the United States very happy. And so then that's not going to, you know, there's geopolitical things going on behind the scenes other than just finance, right? And so
to be clear, let's the data that we have from either the Federal Reserve Bank of New York or the Treasury Department, there has been a lot of treasury sales. It hasn't just been gold.
Right.
A lot of governments have been selling all the reserve assets, which again, any prudent manager would do. You don't just sell one or another. You kind of diversify your sales. You diversify your liquidation. So that happens
exactly.
too.
And yeah, and listen, we know for sure. And listen, I need to tell you this because I can't remember if we spoke since this, but I was at a conference in April, and I was talking to a guy who is a senior executive at the Bank of Abu Dhabi. And he was saying, this was, you know, right in the middle of everything going on. And he's like, we have, you know, business has basically dried up. We have zero demand for dirhams. We have zero demand for yuan business. All of our demand is for dollars. And that was about the same. And so, you know, that's just one bank, right? And so all the banks needed dollar funding. And that's about the time that they came out and said, we would like to potentially get a swap line from the US Treasury, right? And so that's another reason why they perhaps would sell gold rather than sell treasuries, because you still need dollars to operate on the global stage. And if the crisis gets worse, you're going to need a swap line. So you don't want to be fire selling all your treasuries if you're also going back to Scott Besson and saying, hey, or to, you know, Warsh saying, hey, I need a swap line. And they're going to say, well, then sell some of your gold. And they'll say, well, we just won't sell our treasuries and then we'll get the swap line. So
you need the treasuries collateral anyway.
No, exactly. This is the part okay, I'm glad you brought that up. We should talk about this a little bit because I know people who work at institutions probably understand this better than individual investors, retail investors. Financial institutions don't buy treasury bonds because they think they're a great investment. They buy them because they are the collateral off of which almost all banking takes place, right? So they're not necessarily buying a treasury bond at 95 cents on the dollar, hoping to hold it for, you know, however, 10, 15 years, going back to 100 cents on the dollar and clipping the coupon. They use that as collateral to make loans and operate, you know, a bank. They make a spread, right? They earn, I don't know, 4% on their treasury bond and they loan out at 2% and they make the spread or whatever it is. Or they pay 2% on their, 6%, right? They borrow it. They're earning 4 and they're making 6 or whatever. And so I think it's important to understand when the biggest buyers of treasury bonds, regardless of what the price is, whether interest rates are going up, whether interest rates are going down, the biggest buyers don't really care about the price. They just want to be able to make a spread over it because that's the banking that they do. You're probably better at explaining this than I am, but I think it's an important thing to understand because I talk to so many people that say, well, nobody's going to buy bonds anymore. Well, it's just not how it works, right?
It's like the dollar. You don't have a choice. It's built into your business. Your business demands that you have these assets at your fingertips, or at least to have the ability to get them someplace else. So yeah, it's built in demand. And you're right. It's collateral. Collateral is everything. It's not just, hey, you got to have collateral when things are going wrong. You got to have collateral to get things to go right. It's built into how your business is operating under the best of times. So
Yeah.
collateral is there as an emergency piggy bank. It's there as, the basis for your business. You want to get money coming in the door so that you can earn a spread. Well, that's how you do it. You've got collateral assets there that can bring you in funds that then allow you to buy assets, financial assets to play in these marketplaces to become a dealer. You got to have the collateral to begin with. And so, yeah, that's a huge part of it as well.
What are I know you put out so much work; it's hard for me to keep up with all of it. But what are you seeing with regard to that? With the dollar funding and the credit, whether it's plentiful or not.
Well, you still see all the same signals that you saw earlier.
Yeah.
The dollar exchange value against certain currencies, especially those that are most susceptible to the energy shock, are still weak. Governments have responded as best they can, but that's always a short run situation. In fact, a lot of these governments have continued to escalate the situation or escalate their countermeasures. I mean, Japan is a perfect example. To the point the Japanese actually spoke some truth, whether it was accidental or not, saying, hey, you know what? These rate hikes by the Bank of Japan actually aren't working. Maybe we actually need to get some of these Japanese financial firms to keep some of their money home instead of carry trading it all around the rest of the world, which was finally closer to the truth than not. And then, of course, earlier today, I just saw this on Bloomberg. Oh, never mind. We're not going to do that. So the point is you still see the dollar exchange value, which is a very simple thing. But some of the statistics and data that you get, which are always imperfect, they continue to show that reserve assets are being mobilized in various different ways. And it's not always, sell your treasuries or sell your gold. You can lease your gold, which is one of the things that Turkey did. Early on in the Iranian conflict, they leased a ton of gold, a figurative ton. It was actually several tons of gold to raise dollar liquidity. We've seen collateral swaps with U.S. treasuries that took place. So all of the things that you were mentioning earlier on, where everybody needs more dollars, well, you got to find a way to get them, and you dip into your reserve pile in any different way that you possibly can. So as far as the dollar system goes, there's still a tremendous amount of strain taking place, which I was just talking with Hugh Henry about this. Most people don't perceive it because their view of dollars and liquidity and economy and everything else is the stock market. So how can you have, the Nikkei at a massive high or very close to its high? How can you have the S&P 500, the NASDAQ, European shares? How can you have all these stock markets at high when you guys are over there talking about dollar strains and dollar stress? Because if there was dollar stress and dollar strain, wouldn't the stock market be rolling over and tanking? I always say, no, those are two very different things.
Well, and that's that's kind of the thing that I've talked about a long time. The milkshake had many parts to it, right? Everybody seemed to just focus on one part of it, but
they always want to focus on the ice cream, man, because that's the best part.
But the big part of it was that even if treasuries are not bought at the same rate that they were and interest rates go higher, I thought that the rest of the world was still going to buy U.S. equities because that's the next biggest asset class. It has the most liquidity, and it's a place to park big global capital. And we have out of the whole world, I think we have the best growth prospects. And so you've seen these charts going around that the money continues to flow into the United States. And if you're going to buy U.S. assets, what do you need to buy them? You need U.S. dollars, right? And so if flows come into the United States, they're going to put a bid under dollars because dollars are needed to buy U.S. assets, and that will help make the dollar strong versus other currencies as well. So I think that's part of what's kept the dollar strong, despite the many predictions of it, falling to its death again.
Yeah, and then some of the other asset classes that kind of go along with it. So Brett, let's talk a little bit too about China, because I think China is a huge part of every conversation, whether it's be geopolitical, macroeconomic, dollar stuff. I agree with. I mean, China to me is once you understand that we're in a Cold War mentality. As you said before, some of the stuff that the Trump administration is doing doesn't seem to make sense to people. Well, I think it whether you agree with it or not, it makes a certain amount of sense under the framework of the U.S. versus China. We're no longer, strategic rivals or whatever they used to call them. I think it's gotten to the point now where they're open adversaries. And one of the things that really struck me earlier this year, just not all that long ago, we had this high-level meeting between the Chinese and the U.S. Trump went to China. He went to Beijing. And it wasn't just Trump. You had Bessent there. You had Hegseth there. You had Rubio there. You had all the major officials in the administration there. And then nothing. At this massive meeting with all the top people in both countries, and nothing came out of it. At least we don't know what came out of it.
Yeah.
I kind of think it was Trump saying, hey, look, you guys have been doing some stuff for a long time that we're kind of sick of it and we're done with it. Which, by the way, gets us back into why his gold's so popular. In a situation where the two biggest powers in the world are now facing off directly against one another, what the hell are you going to own? You're going to own gold first and foremost,
Right,
and that includes
right.
the Chinese. So I think, what I'm getting at is a bigger picture. And we talked about this last time. You were on with my channel. I think it was 6 months ago, back in January. The map is being redrawn and being rewritten, which creates a tremendous amount of uncertainty. The world looks like a very different place where the US and China are not just growing together in sort of an uncomfortable partnership, where the US and China are openly hostile, not necessarily shooting each other, but very much getting in each other's faces and saying, I don't like you, you don't like me. We're gonna move our pieces along the chessboard. That's a very different world with all sorts of implications.
Well, it does. And so I'm trying to think the way to set this up. So we talked earlier about how, Iran was probably part of a bigger game with China.
Big chess piece, but a chess piece.
Yeah. Yeah. And Iran is one of the most important pieces on the board, right? And I know there's people out there saying Trump is too stupid. He doesn't play 3D chess. I think the point I would want to make, this is not Donald Trump's plan. He didn't walk into office 12 years ago and say, hey, or 12 months ago and say, hey, I have this fantastic idea. This is what we're going to do. A lot of these plans have existed for decades as an eventuality if it ever came to it. It's just that Trump is kind of the guy crazy enough to actually try and pull it off, right? And so, the idea that the United States didn't know the Strait of Hormuz was an important choke point. I mean, they have every choke point in the world mapped out to the granular detail. Now, it doesn't mean that they can just do whatever they want, but the idea that they weren't aware or weren't ready for something like this is just, you don't need to think these guys are all geniuses, but you're not doing yourself any favors if you think they're all idiots, right? They're actually very smart people. And so, I think both Venezuela and Iran were intended to squeeze China's access to energy, right? And then that puts higher energy, puts pressure on China. Higher energy prices puts pressure on China, and lack of supply puts pressure on China. Another way to put pressure on China, and this goes back to Japan, and I can't remember if we talked about this or not, but the yen being weaker makes Japanese goods cheaper, and it helps to stimulate their exports. Well, in Asia, Japan competes with China as a regional supplier, and so lower yen or weaker yen makes Japanese goods more competitive, which puts more pressure kind of from the other side on China as well. And so I think it's probably the yen is being kept weak in order to keep pressure on China, because China is dealing with incredible deflation internally. They're kind of getting squeezed from both sides. They have incredible deflationary pressure internally from all the bad real estate debts. And listen, I don't know if you know my friend Michael Nicolaitis or not, but he just wrote a great paper on the Japanese real estate market. And listen, he didn't come to any conclusions, but he just said, you're telling me the biggest asset class in the world went through a 30% correction and only 1.5% non-performing loans showed up? Something is not right here, right?
Absurd.
You can come to your own conclusions, but that number just doesn't make sense, right? And so that's the reason. What I am describing is the reason that interest rates in China are so low. I think people look at the interest rates in China, and what are they, 1.5% or 2%?
Yeah,
and
10 years 170, the 1 year's at 110.
Right. And the 10 years, what, at 4.5 or whatever it is. And so they're saying, look, this is showing that the world has more demand for Chinese bonds than US bonds. I'm like, that. First of all, less than 5% of Chinese bonds outstanding are owned by the rest of the world. They're almost exclusively owned internally. And the reason that everybody in China wants to buy Chinese bonds is they don't want to buy anything else, right?
Well,
because
lending
of the
has
massive
collapsed
deflation.
too. So you got the
Lending
Chinese
has
banks who are, we don't want to lend, so we're going to buy government bonds.
Exactly. And so China is under pressure right now. And I think part of Trump showing up there with all his cabinet and the CEOs of the 25 largest companies, I think that was largely symbolic, because the market, if all the CEOs that went with him, if you add up the market cap of their companies, it is bigger than all of the market cap of the entire Chinese stock market. So I think it was just a show. It was his way of saying, listen, we're still the United States. We still have power. We want to do a deal with you, because he's very transactional, but we don't have to do it, right? We still have the most innovation. We still have the growth. We have the energy to power our growth, et cetera, et cetera. And so this is, I don't want this to come across as sounding like China has no chance here. Listen, China is a very formidable adversary. They're the second biggest economy. They're incredibly powerful. They're the manufacturer to the world. They have a lot of cards they can play. The point I just want to make is the United States has cards it can play as well, and not everything in China is going beautifully.
Quite the opposite. As you said, I mean, they still have a banking crisis to deal with, because you can't have that kind of housing correction and not have quite a few insolvent institutions. And I honestly don't think they have any kind of plan for dealing with it, other than just kind of hoping they can play out the string for year after year after year and just kind of clean up organically.
Kind of like Japan, kind of like what Japan did just decade.
I know that's the big irony, right, Brent? Because the Chinese are keenly aware what happened in Japan and have been doing everything in their power to make sure they don't become Japan. And what ended up happening anyway? They're facing a Japanese future, because maybe that's just that kind of financial gravity where there's really nothing you can do. Maybe the answer to that is don't blow a real estate bubble to begin with. So basically what gold people have been talking about from the very beginning of time. Well, Brett, I really appreciate you stopping by and sharing us your thoughts. I think that's, we still got some uncertainty that's still yet to bubble up underneath the surface. So we need to keep an eye on everything. Again, appreciate your time, and hope to see you again very soon.
Yeah, hope to see you in a few weeks here. Good talking to you.
Thanks, Brett.